Welcome back to Tech Trends, where we dive deep into the latest happenings in the world of technology and finance. I'm your host, and today we have an exciting episode lined up that revolves around the booming tech sector, market volatility, and the evolving regulatory landscape. Joining us today is our esteemed guest, an industry analyst with a wealth of knowledge on these topics. Thank you for being here.
Thank you for having me. I'm excited to dive into these crucial topics that are shaping the tech landscape and the broader economy.
Absolutely. Let's kick things off with the incredible surge in investments in artificial intelligence. We've seen significant moves from companies like Anthropic, Microsoft, Nvidia, and Google. What's driving this investment boom?
It's fascinating, isn't it? The AI sector is experiencing a renaissance of sorts. Companies are pouring billions into AI technologies, largely driven by the potential for automation and efficiency improvements. For instance, Microsoft has invested heavily in OpenAI, while Nvidia's GPUs are now the backbone of AI infrastructure. They reported a staggering 101% increase in revenue year over year in their data center segment, primarily due to AI demand.
That's a remarkable growth rate. However, there are voices out there warning about an AI bubble. Can you elaborate on those concerns?
Certainly. The rapid influx of investment can sometimes lead to overvaluation, especially when expectations far exceed the current capabilities of the technology. Investors need to be cautious about the hype surrounding AI. While the potential is immense, not every AI startup will succeed, and some may fall short of expectations, which could lead to a market correction.
It's a balancing act for sure. Speaking of balancing acts, we're also seeing market volatility across the board. The S&P 500 has fluctuated significantly in recent months. What are some of the key factors influencing this volatility?
A lot of it comes down to economic signals and investor sentiment. For instance, speculation around Federal Reserve interest rate hikes has created uncertainty. The Fed's recent announcements about potential rate increases have caused ripples in the market. Investors are reacting to the idea that higher interest rates could dampen economic growth.
And what about US Treasuries? How are they playing into this volatility?
US Treasuries are often seen as a safe haven during times of market uncertainty. When the stock market is shaky, investors tend to flock to Treasuries, which can drive yields down. Recently, we've seen a rise in Treasury yields, which could signal that investors are anticipating a more aggressive stance from the Fed. That, in turn, has implications for all sectors, including tech.
It sounds like there's a lot of interplay happening here. On a related note, companies like Pfizer and Genmab have been in the spotlight as well. How do their recent performances tie into this broader market narrative?
Both companies have been under scrutiny due to their respective market movements. Pfizer is still navigating the post-COVID landscape, and their stock has been impacted by concerns about declining vaccine sales. On the other hand, Genmab has been performing well, driven by promising clinical trial results. This divergence illustrates the mixed signals we're witnessing in the broader market. Some sectors are thriving, while others are struggling.
Very insightful. Transitioning now to the regulatory landscape, this is another area that's evolving rapidly, especially with the Meta FTC trial. What's the latest there?
The Meta FTC trial is significant because it highlights the growing scrutiny around big tech companies and their market practices. The FTC is challenging Meta's acquisitions, claiming they stifle competition. This case could set a precedent for how tech mergers are evaluated in the future, impacting not just Meta, but the entire industry.
And we should also consider global regulations. I've heard the UK is moving towards a ban on ticket resales. How does that reflect consumer demands and regulatory shifts?
The proposed ban on ticket resales in the UK showcases a broader trend where regulators are responding to consumer protection demands. Many people have complained about inflated ticket prices on resale platforms, which makes it harder for regular fans to access events. This move could prompt similar actions in other regions, reflecting a shift towards prioritizing consumer rights over market freedom.
That's a significant change. Let's wrap this discussion up by considering how companies are adapting to these shifts. Panera, for example, has been undergoing a turnaround. What can you tell us about their recent strategy?
Panera's turnaround is a great case study. They're focusing on digital transformation and enhancing customer experiences through technology. With their subscription model and improved app functionalities, they're aiming to attract tech-savvy consumers who prioritize convenience. It's a smart move in today's market, where consumer preferences are increasingly influenced by technology.
It certainly seems that way. As we conclude, what are the key takeaways for our listeners regarding the tech sector, market volatility, and regulatory changes?
The key takeaway is to stay informed and adaptable. The tech sector offers immense opportunities, especially in AI, but it's essential to remain cautious of potential bubbles. The market will continue to experience volatility driven by economic signals. And finally, companies need to be proactive in adapting to regulatory changes and consumer demands to thrive in this environment.
Wise words. Thank you for your insights today. They've provided a lot of clarity on these complex topics. And for our listeners, if you enjoyed this discussion and want to stay updated on the latest trends in technology and finance, be sure to subscribe to Tech Trends. We'll be back next week with more engaging conversations. Until then, take care.
Thank you for having me, and I look forward to our next conversation.
Goodbye, everyone.